Welcome to the presentation of the Hypoport Q3 results. You are aware of this. We are a diversified company operating in three industries here in Germany: credit industry, insurance industry, and the housing industry. We have a historic exposure in our core market, the mortgage business, but beside this, Hypoport is more. All four segments this quarter were slightly up or minimum stable compared to the last quarter. So in the current market environment, a great performance for this, what we see around us. So talking about this, what we see around us, and there's a lot linked to the German mortgage market right now. In general, you can say everything for a long-term growth track is in line. All macro factors are going in the right direction. Germans buy because of trigger events, and these trigger events are just stable. So people get children, people want to move. Now, we have a stressed renting market. Thanks to regulation, there's a freeze, you can say. Duration is going up of renting contract. There's no supply to the market and rents are going up. So families which were triggered can't exit to the renting market anymore. They need to find something in the home ownership market. Interest rate shock 1.5 years ago is still difficult for them to adjust, but the environment is for them stable. So interest rate is more or less stable since more than a year. We have, since the beginning of this year, stable house prices, more or less 1% up, 1% down per quarter. We have a constant supply to the market, a unit to be sold because of people dying, people leaving Germany. And there's piling up on both sides, on the interest side of families who wants to buy, and on the seller side, stock and the momentum for the near-time future. But for this quarter, it was just a stable market environment because regulation, again, let's say, it didn't help unlock this market and unlock this freeze. There were a lot of promises made on the political side, tax reduction, additional subsidies, things that may come and let people hope for a better deal, better situation. And so nothing that is unlocking this market in the current moment, but keeps piling up demand and supply on both sides. Result is on an extremely low level, a mortgage market in Germany, you can say, which is under stress. Plus 1% Q3 to Q1. So a tough environment to operate in. How did our units perform? Europace, as the center of the credit platform segment, plus 7%. So taking significant market share just in 3 months. And this even with a core client, a large German bank, which had some trouble in their processing and reduced their transaction volume. So we outperformed the market, this weak market environment, and gain here momentum, especially in the cooperative and savings banks world, where we still have a huge potential for growth, up to 100% in these two sectors, and they represent roughly 60% of the mortgage market. And so with this in front of us, there's a lot of growth for Hypoport, even within such a market environment, which we are realizing right now, and where we keep investing. We balance our resources, but we keep investing to gain as much market share in the current stressed environment as possible, because others can't compete anymore in this environment with us. As a result, the segment presented solid numbers, you can say, stable revenue and gross profit. Mortgage was up on the revenue side. We increased prices in addition, but the personal loan business and corporate finance business were seasonal down. That's why there's a stability there. On the other side, EBIT is up thanks to a good cost management in this segment here. Next segment, private client as well. Core exposure to the mortgage market, a franchise system taking market share. Still like the platform right now, plus 7%. And this is a great achievement. And you see here how the larger mortgage broker organization, known brands, will profit from this market environment, because a lot of smaller intermediaries leave this market. Bank branches with their traditional approach on incentive structures and so on, less competitive in this environment where you need to fight each client for each customer and each closed mortgage. In this time, we are, let's say, our franchisees are slightly declining still number of advisors because they adjust to the current environment, and they need to find the right balance as well from their side to manage this market environment. Looking forward in the process of normalization of this market, Dr. Klein will profit massively from the achieved market position and is one of the 2 known brands only here in Germany. As a result, a positive development in top and bottom line here, a strict cost management on the Dr. Klein side, a solid profit in this market environment, and they are the only mortgage broker in Germany being profitable right now. So our core challenge, the real estate segment, lots of investment done in the last 5 years, and especially in the area of valuations and appraisal business, we were double hit. We have this market development plus massive regulatory changes, which changes the product structure and the resources needed. And we struggle here and create a substantial amount of losses. From a massive growth track, we have to transition now within a year gone, and looking forward, it will take us another year to a completely different business environment with different resources to operate profitably here again. This is a challenge we are not used to, but I see that we are adjusting, new management team, new spirit in this company. We are getting forward here. So where we achieved this already, this turnaround is insurance business. For a long time, we were investing here heavily, and now it's the second quarter in a row that in a stable market environment, which we see, we are profitable. In all three product areas, we were gaining momentum. We could sign up new clients, migrate new clients, so increase revenue and profitability here after a long phase of heavy investment. And this is something maybe new for you as well. Hypoport is not only mortgage business, yeah? So Hypoport in the total for third quarter, or the first 9 months in the third quarter, reported, let's say, for the current market environment, solid numbers. We are not on track with the profitability with record years 2021 before this change in the mortgage market, or last year where the first half of the year were record quarters for us still. We are balancing revenue and costs right now to keep investing as much as possible along these value chains that we are operating in. We have to do a lot of work in valuations to reduce the losses. But with this all executed, beginning of next year, we will start our double-digit growth, which we are used to for the last 25 years, to get back on this track and just grow, even when market is just stable. When I talk about market just stable, we don't expect our market to stay forever this way as it is right now. We expected a period of 4 to 8 quarters. Now we had these weak numbers. This is going to change. There is massive net migration to Germany and exceeding demand on the side of families being triggered and a locked renting market. So we will see in the next couple of years the transition from a renting market here in Germany to home ownership market. And on top of all this is heavy investment needed for the carbon neutrality of our household stock. So this is beside the fact that you are investing right now in a growth story, you are investing as well in a transformation of the German housing market, which is on track and which we saw already in Italy and Spain decades ago. So from my perspective, a safe bet. Thanks for your attention. Hope to see you soon again.